Want to know how to make money with the stock market in 2024? Let's dive right in. The stock market is a bustling, dynamic ecosystem where fortunes can be made and, yes, sometimes lost. It's the beating heart of the global economy, where companies trade shares of their business to raise capital, and where investors like you and me come to grow our wealth. Imagine the stock market as a bustling marketplace. Instead of fruits and vegetables, companies are selling pieces of ownership or stocks, and we, the investors, are buying them. When these companies thrive, the value of our stocks rise and our investment grows. Conversely, if these companies falter, the value of our stocks can dwindle. Now, why is the stock market so important, you might ask? Well, it's not just about making money. The stock market is a crucible of innovation and growth. It's where new businesses get the capital they need to expand, create jobs, and bring innovative products and services to the market. But let's get back to the money-making part, because that's why we're here, right? The stock market offers a myriad of opportunities for savvy investors. Whether you're into long-term growth stocks, high-risk, high-reward plays, or dividend-paying stalwarts, there's something for everyone. However, let's not forget that with opportunity comes risk. The stock market can be volatile and prices can fluctuate. It's not uncommon for stocks to swing wildly in value from one day to the next. This is why understanding the market, doing your research, and having a solid investment strategy is key. So we've covered the basics. We've talked about what the stock market is, how it works, its importance in our economy, and the opportunities and risks it presents. Now that you know what the stock market is, are you ready to learn how to make it work for you? Before you jump into investing, you need to know the basics, right? Now let's dive in. First up, we have stocks. Think of a stock as a piece of a company that you can own. When you buy a stock, you're buying a slice of that company's future profits. The more stocks you own, the bigger the slice of the pie you get. Next, we have shares. A share is just another name for a stock. When you hear someone say they own shares in a company, they mean they own stocks in that company. So stocks and shares, they are one and the same, just different names. Now let's talk about dividends. Dividends are a portion of a company's earnings that are paid out to shareholders. Not all companies offer dividends, but those that do can provide a steady stream of income. So if you own stocks in a company that pays dividends, you'll get a check in the mail or a deposit into your brokerage account. It's like getting a bonus for being a part owner of the company. Finally, we have returns. Returns are the gains or losses made from an investment over a period of time. It's expressed as a percentage. If the value of your stocks goes up, you have a positive return. If it goes down, well, that's a negative return. But don't fret, the stock market is a roller coaster ride, and it's all about the long game. Understanding these terms is crucial before you start investing. It's like learning the rules of the road before you start driving. You wouldn't hop into a car without knowing what the traffic signals mean, right? The same goes for investing. Remember, investing in the stock market isn't a get-rich-quick scheme. It requires patience, knowledge, and a bit of risk-taking. But with the right understanding and approach, it can be a powerful tool to grow your wealth. And there you have it. With these basics in hand, you're one step closer to making money in the stock market. Let's move on to the next step, shall we? Ready to dive deeper? It's time to learn about research and analysis. In the world of stock market investing, knowledge is power. The more you know about a company, the more informed your investment decisions will be. So, let's talk about how you can arm yourself with this knowledge, shall we? First off, it's crucial to research companies before you invest in them. Think of it like buying a car. You wouldn't just walk into a dealership and buy the first car you see, right? You'd look into the car's mileage, its history, maybe even get a mechanic to check it out. Investing in a company's stock is the same. You want to know everything there is to know about the company. What do they do? How do they make money? Are they profitable? What's their growth potential? Now, there are two main types of analysis you can use to research a company: fundamental analysis and technical analysis. Fundamental analysis is all about looking at a company's financials. It's digging into their balance sheets, income statements, and cash flow statements. You'll also want to consider the company's industry, competitors, and overall economic conditions. On the other hand, technical analysis is less about the company itself and more about its stock's price history. Technical analysts use charts and patterns to predict future price movements. This method is more about timing the market, figuring out the best time to buy or sell a stock. Both fundamental and technical analysis have their merits, and both can help you make informed investment decisions. Some investors prefer one over the other, but many use a combination of both. It's all about finding what works best for you. So there you have it, a crash course in research and analysis. Remember, investing isn't a game of chance. It's a game of skill. And the more you know, the better you'll be at playing the game. Remember, the more you know about a company, the better your investment decision will be. You've done your research. Now it's time to take the plunge and invest. All right, first things first, let's talk about buying stocks. It's not like buying a loaf of bread or a new pair of shoes. You can't just walk into a store and pick up a couple of shares. You need to go through a brokerage. A brokerage is like a middleman that facilitates the buying and selling of stocks. You open an account with them, deposit your money, and then you can start buying shares of companies. Now there are loads of brokerages out there, and it's important to choose one that fits your needs. Some offer lower fees, while others provide more research tools. It's like choosing a new phone. You need to find the one that suits you best. So, do your homework, compare different brokerages, and pick the one that seems the most appealing. Once you've got your brokerage account set up, it's time to start buying stocks. But wait, don't just throw all your money at the first company you see. That's a surefire way to lose your hard-earned cash. Instead, you want to diversify your portfolio. Diversification is like having a balanced diet. You wouldn't eat only burgers every day, would you? Similarly, you shouldn't invest all your money in one company or sector. Spread your investments across different industries and companies. This way, if one of your investments takes a hit, you've got others to fall back on. It's a way of managing risk and ensuring you've got a safety net. And remember, investing isn't a sprint, it's a marathon. You're not going to make millions overnight. It's about making consistent, informed decisions over time. Be patient, stay informed, and keep your eyes on the prize. And there you have it. You've just made your first investment in the stock market. So buckle up and get ready for a thrilling ride on the roller coaster that is the stock market. Investing is only half the battle. Managing your investments is where the real game begins. Now that you've dipped your toes into the world of stocks, it's time to keep a keen eye on your investments. Think of your investments as a garden. Just like how a gardener tends to their plants, you have to tend to your investments. This is where the concept of a portfolio comes in. Your portfolio is the collection of stocks you own. It's your personal investment garden. To manage it effectively, you need to monitor the performance of each stock, prune the ones that aren't doing well, and nourish the ones that are growing. However, remember, the stock market isn't a get-rich-quick scheme. It's about patience and long-term investing. It's about planting seeds and patiently waiting for them to grow into robust trees. Don't let short-term fluctuations scare you off. Remember, investing is a marathon, not a sprint. So, keep your eyes on the prize and keep moving forward. You've learned a lot today, but there's still so much more to explore. The world of the stock market is vast and full of opportunities. It's a thrilling ride, filled with highs and lows, but remember, the potential for profit is always there. Investing is more than just a game of numbers. It's about understanding trends, mastering the art of patience, and making strategic moves. It's about taking control of your financial future and making your money work harder for you. You've got the basics down, but never stop learning. Dive deeper. Keep reading, keep researching, keep asking questions. The more you know, the better you'll do. Remember, the stock market isn't a get-rich-quick scheme. It's a long-term commitment, but with time, patience, and strategy, it can be a path to financial freedom. So, what are you waiting for? Start your investing journey today and make the stock market work for you.